Bob, Bill, Fred. Raining in Florida. It's okay in Chicago. I think like 50, 60. So it's not bad. It was sunny, so it's actually not bad. Raymond, welcome back. Faust. All right, let's get our Discord friends. See if they're awake. Okay, I think we can start then. Welcome to, for those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. My background is technology, master's degree in computer science, specializing in statistics, artificial intelligence, financial modeling. We have a team of financial engineers that are building and enhancing new models. I've been trading and managing my own money for over 20 years, mentoring and teaching subscribers how to trade stock and options. Disclosures are very important if you're new to trading stock or options. I encourage you to visit optionsclearing.com, the link on your screen, to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing for general education information purposes. All right. In terms of trading psychology, very important to have a trading plan, right? That ultimately you don't know how far the market is going to rebound. You know, we're trading in the bear market, bull market. There's still unknowns. So what do when you face uncertainty? The book that, in terms of framing, the latest blog on Yellow Tunnel was framing. People will fight for the loss, to avoid the losses much harder than the gains, right? So when you frame your question, when you write down in your journal the trade, I encourage you to always think about maximum loss first and then maximum gain. Unfortunately, we do the opposite, right? We set the main goal, and then we either don't set the stop loss, apply a lot more mental energy, that's system 2, visualization, then positive visualization, right? A lot of people say, Vlad, you're too negative, just concentrate on the winners, forget the losers. Well, we're trading in a sideways market for the past couple of years. We might trade in the sideways market for another year or two. So, not the passive management, right? So you have to have, if active management, the first thing is position size and number. Market has been very resilient. We had positive surprise in CPI data, positive bouncing back on retail numbers and PPI data, but it's gap, right? The first stop is the gap, right? The bears will try to push and close the gap, right? So that's your support number 1. Your overhead resistance is yesterday's high, and pre-market we are slightly higher, 450, right? So that's your 1, and then that's this level. Then we are at September high. So this is support number 1. Bears will try, and then more meaningful support that goes back to medium term is slightly below that, so 442. And then August high, right? August high around 460. We're going to try to close this 50-day moving average and October highs, support number 2. So if you're doing trading and you're trying to figure 9 for 44, 1%, it's not a big move. So 5 points, right? We could be there next week, right? If you don't like to make decision every day or every other couple of days, then I would use 432, right? That's 449, 432, roughly. So that would be my positive, negative visuals. I mean, bears are kind of retreating, right? Especially after yesterday's sharp pullback in dollar and sharp pullback in yield, you have a significant, bears are basically scratching their heads, right? They're scratching their heads, and in the bear market, in the bull market, a lot harder, to justify. And the main conversation is that Fed is not going to raise interest rates this year. They'll probably not going to raise next, right? Then, when are they going to lower interest rates? And a week ago it was toward the second half of the year, next year. Now maybe it's the first half of the year, as early as March, as early as May. Right? Goldman, JP Morgan, they're basically beating the drums that interest rates will come down lower. Earlier, Fed is going to start talking about lowering interest rates as early as April, March, and will not raise interest rates. So the path of least resistance is to the upside. This is your stop level. I would be a buyer in pullbacks. Market is overbought, extremely overbought. We had this kind of big thrust to the upside. I'm not sure how much more we can go until we at least have some kind of a level of consolidation, right? So I think around R1 we will consolidate, maybe for even a couple weeks until December. So I would be a buyer into pullbacks, not chase the market and just continue to kind of offload some of your bullish positions. And on pullback, you can consider buying. So 5 points, 20 points, 2.5% on $10,000 cost average, and kind of, especially that the market is overbought, and split the trade into two. Last night, in my personal, the JD and TJX. In yellow tunnel Tradespoon, I did JD. JD is up 28.48. So I need to manage this trade. JD, right? 30 call and 24 put. 24 put should expire worthless. 30 call, well, not worse, but it's way out of the money. But the 30 call, we are approaching 1.5. Halfway the distance. So I would put in trade, try to close that, especially that the market, have a very bullish bias right now. It's and unbeat up stocks like Chinese stocks, JD. So try to maybe break even 5. And the goal is to close it by the end of today, because it's only Wednesday. We could have Thursday up market, Friday up market. It's all possible. So I'm putting an order and trying to close it for 5 cents, the short call, and see if I get executed. If you did TJ Maxx, it's trading down 3, almost 4%. Down almost 4%. So let's watch JD and TJX. JD is up 7, TJX is up down 4. Raymond, good morning. Faust, good morning. How are you? PPI down 0 point, food energy unchanged. Okay, yeah, PPI data is trending lower. Okay, so 8:29, 1 minute. So let's watch JD and TJX pre-market. So TJX is down 3% pre-market. market open, TGX down 2.5%. Let's see. And JD is up 7%. Let's see. JD calls are trading at, let's see, what are they trading at? 20 cents. So they're trading at 20 cents. So 30 calls are trading at 11 cents. Let's see. TGX looks like slowly recovering. So let's put the 5-minute chart. So TGX 88 put. It's recovering. You can close now for a profit. Let's see, where's JD 13 cents. See the market, Dow is up almost 0.5%, QQQ up 0.5%, and spiders are up. How much spiders are up? 0.5%, close to 0.5%. Okay. See JD trading at 16 cents, 28.48. Let's look at JD. Still watching JD. Yes, okay. So we have one candlestick. So usually I'm looking for two candlesticks. So it looks like it's continuation, continues to trade higher. So getting close, within 3%, within 3%. So this is a choice. What is it trading at? Trade. So now it's a losing trade. Or breaking. So I can buy, maybe buy half of the shares, maybe wait 3 more minutes and see if it continues going higher. Right? Buy half of the shares or close for a small loss. Right? That's the choice. So let's see if we can get some clarity. So waiting for maybe at least 2 more minutes, see if this continues on. So 8:49, 8:39. So 8:40. So we have two. See what is it trading now? See what is it trading now? 21. So it's right now breaking even. 21 cents. So close to break even, or maybe buy 50 shares, 8:40. Let's wait a couple more minutes and see where we're gonna stop. questions? Okay, so let's see what else is interesting. Emerging market up 1%, China is up 2%, industrials up 0.5%, so kind of a small continuation. Small caps are up 0.5%, consumer discretionary. Retail up 2% on Target, right? Target, I think, was up 15%. So it's good that I didn't do the calls, right? So Target, it was so oversold that any positive surprise in the stock is up almost 20%. So if you sell calls, it will be an issue. So retail is up on Target earnings. Let's see, value is up. So small gains. Consumer staples are up 80 basis points. ARK is up 1.5%. Eli Lilly is flat. Silver up another 80 basis points. Murphy up another 30 basis points. Micron down. CCJ is down. Apple. So 2 more minutes. And we'll have 3 candlesticks. While we're waiting, let's just go over the other positions. So continue to trim IWM. It is facing 180 overhead resistance. Right, we talked before, bear market basically say as long as we're staying below August high, right, we're underperforming. QQQ is already at July, August highs. Small caps are way underperforming. So as long as that's the case and underperformance, bears are going to say, well, at some point market is going to roll over because you don't have participation from the small caps, banks, and regional. So I would watch 200 level around 186. 180, there's a lot of overhead resistance. So for that reason, I am trimming IWM. I did close the put spread. They're going to say, some inflation. So I think at this point, this put spread probably is just the time is against me. So I closed the put spread. If you're more conservative or you have a bigger position, you can open maybe 175, 165 put spread right now. Right, this is kind of your new support, 175. You're watching JD, MUR trying to get out at 44.80, so I did modify the price. Oil has been also underperforming together. Again, driven by the 7 magnificent stocks, predominantly QQQ growth stocks. So that's that. Let's see. So we have 15 minutes. Okay, where's JD? JD is first to try to protect the position. So maybe that makes sense. And my stop loss, I mean, if it does reach 28.50, then the short calls, will make money. And then, potentially can continue going higher. So buy, let's do it for $29. I have, and then stop loss is right below this line. So about 50 cents I'm risking. Okay. So now I'm locked in right into the position. Right, it's a cover call. So now the goal is if it drops to that 28.50, close the short call for 5 cents, or close the stock for, if it does reach 30. If it reaches 30, great. So that's JD. TJX is not going anywhere for now. All right, so what's the high? Review the rest of the positions and see if we want to make any adjustments. So we talked about IWM. So I still have 170, 175 close over to the 390, 80 cents. I mean, yeah, cool market and close. So by end of the day, I'm going to be out of 170, 175 calls, but I will leave small exposure with IWETF. And you have more than one contract, you have larger portfolio, more than $10,000, then maybe just close half of the position. Because on one hand, I still think it's a pattern of higher highs, higher lows, but on the other hand, market is exceeding some of these positions. So that's IWM. We talked about JD, LA Lilly. Staying at the same, 600 is your support, 620 overhead resistance. It's been doing consolidation. So for now, I'm not changing LA Lilly, stay in the same position. Micron, I still have a small position trying to get out. In case we pull back, let's see. Yeah, it looks like it's rolling over. I mean, it may or may not be, it's already above June high, right? It's already above June high. It may or may not be sustainable breakout. You know, I'm just gonna exit out of Micron. It's a good trade. 44 times. Micron. Okay. Tuesday after market. So I'm out of Micron, right? I'm out of Micron. Short trade, you know, CPI was better than expected, so you know, I'm out. I think market is overbought, so right, probably the same reason as target up, because the stock is just got annihilated, right? And everybody feels bullish, right? Bullish sentiment. A lot of people are contrarians, right? They like to buy weak stock because they perceive it as a discount, right? I usually don't like. I like to buy strong stocks. A lot of people, you know, they look, it was 210 and now it's 50. It must be a great buy. So kind of this contrarian view, you know, it could be that, or I mean, I didn't look at the results. From what I heard, they missed, right? They missed. I mean, they're restructuring. They're trying to save money. So, you know, I usually would not buy stock like that. Target, you know, same thing. Target. I mean, a lot of people just think that the worst is behind them, right? The worst is behind them. So Target is up. How much are they up now? 20%. Probably more, right? Yeah, almost 20%. So the idea is that maybe, you know, the multiple is a lot less than the peers, right? Multiple of multiple of, what is it, price to earnings 14. You look at TGX, it's 30. Is TGX really twice as good as target? Maybe not. So then people pile into the trade, right? And then they think that, you know, there'll be a catch-up trade. So I mean, we've seen that setup before. How's IBM? Is it still going up? You know, similar, yeah, IBM's similar setup. It was a 200-day moving average, gapped up, and then, you know, it's already at August highs and 2023 high. Okay. JD's pulling back. Let's see. CCJ, Bob's favorite stock. Okay. Okay, what else? That's about it. That's proud. So Kevin, I mean, the rest of the market, I mean, yesterday we had a broad-based rally. So the question is, you know, I mean, the main bear argument is IWM is behind, right? It's kind of underperformed. We do have this kind of a very large volume, which usually exhaustive, right? It could be exhaustive. So we'll have to wait and see. First, it needs to get above 200-day moving average. If it gets above 182, then you have a question of 192. And then after 192, you have a question of 200. If small caps jump above 200, bears are not going to have a lot of ammunition to argue the bear argument. But as long as IWM significantly, and value stocks in general, significantly underperforming the rest of the market, then bears are just going to say, well, okay, we're still trading in a bear market, and probably not, you know, not this year, but sometime next year we'll see kind of, right? Because nobody knows exactly why the inflation is subsiding, right? It could be dropping because, you know, the restrictive environment, or it could be dropping because, you know, lack of demand, right? But, you know, it's below 50-day moving average. It had a breakdown to 4.5, break below 4.5, and the next level to watch is this, you know, it's the initial breakout, right? 4.3, right? That's the last October high in interest rates, which was the bottom of the market. So if we drop below 4.3, well, you know, then higher for longer probably not going to happen, right? Then the message is going to change, you know, that the rates are probably going to drop sooner than most people anticipate. So I would watch 4.3 on 10-year yield. That's probably the most important chart. We're not that far away, right? We were at 4.4. So we're literally approaching this like 12 months support. 12 months, very long support. I would watch that level. Very important level. Building planes, Middle East is buying them. That's great. Nice continuation in Boeing. Yeah, Kevin, I mean, some stocks that are, I mean, right now it's a bullish, everybody feels bullish, right? Bulls are in control. So they feel bullish and the market continues to go high. All right, other position, what else do we have? What else do we have? We talked about Micron, we talked about Murphy Oil. 370, 375 call spread, and I think I'm getting close to exit out. Yeah, it's 420. It should exit out. Well, both. So yeah, the IWM is getting very close to exit at $4, and QQQ is getting close to exit at 420. They both might get filled today. Just do market and close on both. So we'll do market and close QQQ. Silver continues to grind higher, right? Dollar kind of made a vertical move down. Silver made a vertical move up. And this downtrend. Right, so it needs to clear 2160 first. It needs to clear 2160. So it's also facing a lot of overhead resistance, right? Facing a lot of overhead resistance. But for now, it's grinding higher. TLT, I would be a buyer into pullback. I think, you know, the consensus is that Fed is done raising interest rates this year and next year. Obviously, it can change if the inflation comes back, but for now, inflation is continuing to trend in lower. So unless something changes, you know, I think we have reached the peak of interest rates, and now it's, you know, lower highs and lower lows. Right, so those are the positions. Let's see what's going on. So JD is 28.63. Getting close. What's the option trading at? 14 cents. Lower. Drop in price. FXI is still sitting at the neckline. JD. All right, first we have to get rid of the short calls. Let's see, what are the short calls are trading at? So the short call is basically breaking even now with the short call. So overall, short and puts and calls are actually making money. Okay, so we're getting close to getting filled. JD calls. I put 5 cents. Let's see if we can change it to 12 cents, 11 cents. Okay. This continues to drift lower. Okay. So 12 cents. Okay. All right, so JD is, I'm out of JD calls. Now I have to manage stock position. It's going against me. I mean, half of the shares. So okay, so JD calls out. So let me just look in. JD calls. Okay, let's see. Okay, now it's the stock. All right, is FXI finding something at the bottom? That looks a little bit better than JD. Give me 1 second. All right, so let's see. JD is out. FXI is stabilizing. Still, I have JD stock position. Right, I have JD stock position. Okay, to manage. Xi is meeting Biden, San Francisco. Thank you. All right, what is going on? TJX. All right, questions, no questions. Discord, you guys have any questions in Discord? Oh, Mark, welcome back. So Spider's up 30 basis points, Banks up 0.5%, ARK continued to grind. What else? Looks like China is rebounding. Is JD rebounding? Not yet. Okay. A little bit, 28.40. Okay. So let's see. Let's try to close JD. Put an order to close at 29.05. So what's JD? 29.05. Or 5. Break even. Pay for commissions. Okay. Let's see if China can keep going. Let's see. So it looks like Eli Lilly pulling back. Let's see. Or some buy. $580. And the leather continues to fluctuate. Fred Anand. Well, it's good that we didn't do it, right? And that's a good reason not to do illiquid stocks, right? Because if the liquid stocks, you could have these big moves. I mean, I mean, if you did the earnings, I think it was like 25%. So I think you still would be up. But on the other hand, it doesn't trade in pennies. So even if you sold that call and it didn't reach that strike price, it would be very hard to defend. The advantage of JD is that it's relatively easy to defend. JD trades millions of shares. You know, you're not going to have these wild swings, kind of unpredictable, right? I mean, it follows certain pattern, right? Rebound, pull back, rebound. You know, it was onwards. Then that's kind of the reason. Do better in this. All right. Thank you, Kevin, about AAP. Fred taking long position on Boeing. Yeah, I mean, I think till the end of the year, it's split in don't risk more than 1%. I think that's the rule. Put on 1%, it does look healthy. You know, probably 200 is your good support. So you're risking $10, but it could be a $232 stock. So I like that. But you know, market short term, it is overbought, right? It's kind of better an ABC. A lot of these stocks, probably C, probably D, and E going into the end of the year, right? So I would trade as if this is the pattern. So that means if you buy now, you risk $100 in $10,000 account, and you wait for pullback to 200. But it pulls back to 200, you buy again, right? So that would be my strategy. All right. Any other questions? All right, JD, what's going on? It's falling FXI is rebounding. Yeah, Boeing got new contract. Thank you, Kevin. Selling credit put spread next week. Okay. Credit put spread. I don't know. Looks like FXI is not breaking above this level, pulling back. CJD is probably going to follow the suit. It's 817. Okay, I'm going to close JD. You guys can watch it if you want to, or just take a loss. But it looks like the rebound is weak. It's a good example. Okay, so I'm out. I don't have time to watch the trade. And 28.20 at this point, if it drops, I mean, below 28, I mean, you should be definitely out. But this is kind of, it looks weak. So I would just get out of the trade. All right, any other questions? Bob, yeah, small caps are rate sensitive, interest rate sensitive asset classes. XLU is about to break out above this overhead resistance. You know, KRE, let's see, does KRE have any overhead resistance? We're on the right side of the trade this time on IWM. But, you know, it needs to clear now this 200-day moving average. So we're getting to this medium-term resistance, right? Medium-term, we're talking about 5 months worth of resistance. So probably a little bit overdone. Probably a little bit over, considering buying more. I mean, ideally, I want to see that 50-day moving average, 581. So maybe buy small because you don't know if it's going to hit, but I think 50-day moving average looks nation, right? It doesn't matter what, you know, we can look at what is Bob's favorite indicator, MMFI. Hello, watch that, right? A lot of people are watching, so it's not an extreme, right? But it's, you know, a little bit more room to run. But we're getting toward July, August high. The other one that a lot of people are watching is percent of stocks above 20-day moving average, MMTW. That is getting there, right? It's basically at the August highs, right? And VIX is, you know, so you look at these contrarian indicators dropping, you know, to the support, July, August support. You look at the sentiment chart, right? Bullish. Can it continue going higher? Sure. Why is it not updating this date? Okay. But we're getting to these extremes again, right? Where all the bearishness had been worked out. The only thing that's going for the market is that, you know, it's usually November, December, there's still more room to run. So probably some consolidation is due, right? Maybe some kind of pullback is due for the next couple of weeks, and then another leg up, right? If you have a large account and you can afford to do one contract of $200 stock, okay, then you sell credit put spread, right? You sell credit put spread. Any questions? Who is doing afternoon session? Scott. Today is Wednesday. Scott is doing afternoon session. I will be back tomorrow morning. All right, guys. Ladies and gentlemen, thank you very much. Have a great day. Thank you for participation. We had a lot of people today. Like it. Thank you. I appreciate it. Quick announcement. Please, please, please. I need the review on Yellow Tunnel. If you have something positive to say. I mean, if you come here almost every day, I assume there's, you know, benefit. So if you don't mind sharing that benefit on Trustpilot, then it would be greatly appreciated. For every, you know, one bad review, you know, it takes 7 good reviews for me to feel good about Tradespoon and Yellow Tunnel. So it's, again, this watching YouTube channel, I assume you're getting some kind of benefit. Then please subscribe and try to share it on social media. It takes, you know, 30 seconds of your time, but it helps us with our marketing effort and, you know, help other people. You know, if you find benefit in this content, then I'm going to assume other people will find benefit in this content as well. All right. David, Deborah, Paus, Fred, Genevieve. Genevieve is back. Welcome back, Genevieve. Han, Ian, John. Tradespoon, Yellow Talent Platform, love it. Joseph, Kevin, Lalit, Mario, Martin, Morris, Michael, Patrick, Peter, Raymond, Thomas, Bill, and Wolford. Thank you. We'll see you tomorrow morning. Bob, oil turnaround. Why is oil down? I mean, that's another barrier argument, right? Why is oil, if the economy is recovering and interest rates are going lower and the earnings are great, why is oil going down? But, the glass is still half full, half empty. Just depends how you look at it. All right. Thank you very much and have a great day. Calls through January. Okay. And a lot of people say the crude oil is, a lot of it is seasonality, right? So we might have a bounce back, and 2021 was the same kind of, right? It was very bearish, and then December, January started the rally. Same thing here. Just down, up. October, November, down, and then November, December, up. So from seasonality point of view, and seasonality, we'll find out in January. All right. Thank you. Have a great day.